On All About Stocks this week, choppy trade on Dalal Street. The Nifty ends below 8,200. We'll tell you what your investment strategy should be. Our advisor Gaurang Shah will tell you why you should be investing in Siemens for the long term. And Gaurang has made a profit of 60% in his portfolio. Especially in a market like this, we'll tell you how you can make similar returns. Welcome to All About Stocks. Thank you so much for tuning in. I know you feel like you don't want to be talking about the stock market at this point, but this is exactly the kind of market that you and I should be excited about. As long-term investors, this gives us an opportunity to enter our stock market. We're going to tell you how to do that over the next half hour, and we'll also answer the questions you sent in during the week. Remember, email ID is at the bottom of your screen. Send in any question at all you might have about your stocks. And you can reach me personally on Twitter. Joining us today is Gaurang Shah, Vice President at Geojit BNP Paribas. Gaurang, it's always a pleasure to have you on the show. You know, it always makes me happy to chat with you, especially in an interesting market like this one. And, you know, I'm going to pick up from the point of view of our viewers of this show, from what we were talking about last week, where, you know, our advisor who was here last week told us that it's a great time to enter the market because the market is soft at this point. And we've had a bad monsoon forecast. We've had numbers that have been disappointing. And of course, some people are calling it the end of the honeymoon period for the Modi government. So if all of these reasons are causing the market to be soft at this point, what sort of a trigger do you foresee in the next year or 2 years or 6 months for the market to turn around?
Well, Fair, I think firstly I would rather talk about the markets at this point of time rather than tell you stories about what my grandmother told me. So I think this is a fantastic time to talk about markets and get invested. And honestly speaking, the Prime Minister, Mr. Narendra Modi, will be completing just 1 year. I think what has happened in the entire process post the election is that the expectations had built up, because we came out from almost about a decade of downward and very sluggish growth, and confidence getting shaken up. So I think, and of course, very recently, the kind of circus that has been played in the parliament because of the paralysis and the bills not going through, the sentiments are getting more dampened. You, on the other side, you're hit by a poor corporate earning. You have global fears as well in terms of Greek god turning into a Greek ghost. And of course, you have, a little bit of scary feeling in terms of equation of currency. So, put these things into perspective, and of course, the great mad fear that has propped up its head, which has created negative sentiments amongst the FIs. But everything said and done, I think given the fact that you corrected almost 10% on Sensex and Nifty from the highest levels that we recently saw, and not ruling out another 2, 3, 4, 5%, I think from current levels it is only prudent to start deploying at least 25-30% rather than wait for that bottom to be formed. And you always dream about buying at the lowest level and selling at the highest level. This is always a dream. It does not really work in reality.
Well, so tell me this, if we are going to expect a weak monsoon, I'm going to come back to that question, and you use the word paralysis for the first time since the new government took over, and that's something I think that a lot of Indians actively voted against, so it might be fairly disappointing to be back where we started from. And of course, the fact that corporate numbers are weak. Which of these three things do you think will change first, and when do you expect that to happen?
Well, first, I think there should be some, common platform and thought process put in place in terms of the bills that have got stuck in the parliament. We heard about GST, we saw what happened to the land bill, the finance bill, etc. So I think there is going to be some common platform, some common thought process, bring all the stakeholders together. GST fair is also one of the important things that the government is wanting to get through. So my sense is that these things, start getting pick up momentum in terms of actually the bills going through implementation, etc. should soothe the sentiments. That's point number one. Point number two, I think corporate growth will take at least another quarter or two to stabilize and then give you a positive outlook. The most important thing will be in the next week or two, if government clears out the confusion and chaos that persists in terms of MAT on the FIIs. I think that will soothe the sentiments in terms of the sell side figure, which has been quite heavy over the last almost about 11 days. We had FIIs coming out with negative sell side figure. On the monsoon front, I think it is only too premature because we have not even reached to the beginning of the season. So let's come there. I would rather put it this way. Let's go to the bridge and then think about crossing it after that, rather than contemplating as to what happens right now and react over it. So it's a little bit premature, and of course the Met Department also said that things could change and the El Nino effect could get subdued a little bit, which could again translate into a better or an average monsoon, which augurs well for us.
Well, very quick question for you. My producer is telling me we're running out of time, so I'm going to keep this very short. If I'm going to enter the market or if I'm going to accumulate at this phase, what sectors would you like me to focus on at this point?
Well, I would hit the hammer on the nail with IT because the correction has given good valuation. So I think IT is a good sector to get into. Then, of course, you have pharma. We have seen sizable amount of cuts coming in over there. Autos, oil marketing companies, cement, selective consumer discretionary goods. This is primarily, 4 or 5 sectors that I would look at, and my focus would definitely be on large cap first.
All right, that's very interesting. We're going to ask him about all of those stocks specifically a little later on the show. But first, I want to take a few questions. Mukesh, I beg your pardon, has written in. He wants to buy HDFC Bank at current levels. He wants to know if it's a good idea. Now, HDFC ended the week at 988, but numbers came in. Numbers were in line with expectations, much like HDFC always does. It did not disappoint. Is HDFC a good buy at these levels, Gaurang?
Well, as a disclosure, it is one of the picks amongst the private sector banking universe that we have, and our target that we've set aside is 1255 with a 1 year plus time horizon. And I think the numbers, the bank has been consistent, and both HDFC as well as HDFC Bank has been value creator in terms of an individual portfolio. So I would definitely recommend that correction that, as we have seen, is a fantastic opportunity to buy into it. Look for a target of 1250 from a 1 year plus time horizon.
You know, the next question is interesting because you did mention pharma. And we have Shankar Roy, who's written in. He has 50 shares of Cadila Health, which he bought at 1,500 rupees. And he has Natco Pharma, which he bought at 1,400 rupees. He wants to know if he should hold on to both of those stocks. So I want your call on both of them. Now, since you're bullish on pharma, should he hold on to these stocks? And is there anything else you'd recommend at this time?
Well, surprisingly, both these names have been outperforming. When we saw names like Dr. Reddy's and the Sun Pharma and the Lupin of the world coming down post certain downgrades that we heard from the brokerage houses stroke institutions. I would say hold on to Cadila with a target of about 1725. On Natco Pharma, you can look at a target of about 2250. At these levels, maybe, you could think about booking profits or maybe revisit in terms of the outlook.
All right. In fact, since you mentioned Sun Pharma, we also received a question about Sun Pharma as well. Amir had written in. Now, he has 800 shares of Sun Pharma, which he tells us he bought at an average of about 951 rupees. He also holds Oil India, which he bought at 453. He wants to know if he should hold on to both of those stocks. Now, going by what you said about Sun Pharma, we did see the stock move downward because of some news. But fundamentally, do you think it's a strong enough stock to hold on to?
I think post the merger, it is one of the strongest entity of merger of Ranbaxy with Sun Pharma. Not only in the domestic market, but even in the overseas market, in terms of manufacturing facilities, domestic, overseas, in terms of product profile, product lineup, in all the parameters that we see, I think Sun Pharma definitely stands very, very tall. The recent correction was by the virtue of the residual stake sale of Daiichi of about 8.9% at 10% discount, and that's the reason why we saw the cut come through. I would say, as a disclosure, we have a positive coverage, and if I'm not mistaken, our target is somewhere close to about 1150 to 1250. So I would say hold on to Sun Pharma, and any opportunity sub 900 levels would be a fantastic level to buy, or for somebody to get a fresh at an entry level point. On Oil India, that's the stock that you mentioned. My advice would be to look at BPCL, because we believe that the oil marketing companies would be the greatest beneficiary of lower crude oil prices, and some of the estimates that we worked out was under recovery going down by almost about 65 to 70 odd %. Now this augurs very, very well, and of course the revised subsidy formula also augurs well to both upstream and downstream companies.
All right. Now, we'd asked Gaurang to take out some time this week and pick a stock that he thinks we should be buying at this time. And he was kind enough to pick out Siemens for us. Siemens ended the week at 1360. That's on your screen right now. Gaurang, tell us why Siemens at a point like this. Given that entire list that you told us to focus on, IT, pharma, FMCG, why a stock like Siemens?
Well, so that's cap goods engineering that I left out. For you to ask me this question, that's primarily the reason why I left it out. We believe that cap goods engineering space is definitely going to look much more robust going forward from here on. Make in India, ease of doing business will take time to materialize, but as and when positivity is stricken in terms of policy changes and implementation by the government, this is one sector that will look much more incrementally positive. Siemens, a couple of factors that we kept in mind is increased amount of interest in terms of power distribution equipments, ancillaries, in terms of cap goods, new orders coming in, and of course the parent has been quite supportive to the Indian outfit. So we believe that this, and not to forget, this is one stock which actually bounced back quite smartly after almost about 10 to 15 days of correction that we saw. The stock ended the week with a positive note. So from here on, we are working with a target about 1480 fair. Depending upon the numbers quarter on quarter and of course the order visibility and news flows, we would definitely revise it upwards. But this is one particular stock, from current levels, your downside looks extremely protected.
All right, so that's the recommendation for this week. That's Siemens. And remember, if you have a question about that recommendation, feel free to write into us and we'll have Gaurang answer that question for you. And we track our recommendations on this show, by the way. So we'll ask him about it the next time he comes in. Welcome back. You're watching All About Stocks and ET now. Gaurang is still with us and we're looking at our long-term portfolios. Now, if you're talking about our portfolios, we should also talk about Gaurang's portfolio. Back in December 2012, we asked him to design a portfolio for us on the show. It's currently at an overall gain of 60%. The Nifty over the same period is up 40%, so we're still outperforming the Nifty, especially in a market like this one. What I'll do is I'll give you a list of stocks in his portfolio and then we can talk about them. There's IndusInd Bank, Sun Pharma, Tech Mahindra, Reliance Infra, Maruti Suzuki. These stocks were just added to the portfolio the last time Gaurang was in here. Wockhardt, Mindtree, Apollo Hospitals, Eicher Motors and Infosys. Gaurang, tell me this, since there are several viewers who are writing in saying, can we get into the market at this point or can we get back into the market after we exited our stocks some time ago? Would it be possible for them to just pick up this model portfolio and use it as is, or should we be cherry picking within this portfolio as well?
I would say you need to be choosy in this portfolio, that model portfolio rather, which I had created for you, your channel, as well as the viewers and investors of your channel. My understanding is that you could pick up a few names from here. Maybe case in point, IndusInd Bank would be one of them. Infosys would be the other one. Eicher Motor would be the third one. So I would, in order of preference, I would pick these up first and possibly give it an allotment of about proportionate in equal installments and start picking into them. The rest, I think, since we are talking about a little bit of subdued market environment, taking an opportunity of much more lower side would be the most prudent approach towards entering the rest of the stocks that I have in my model portfolio.
All right, so a quick recap of Gaurang's portfolio. You can write down these stocks, and if you can't write them down, then send us an email and we'll send you a copy of the list. There's IndusInd Bank, Sun Pharma, Tech Mahindra, Reliance Infra, Maruti Suzuki, Wockhardt, Mindtree, Apollo Hospitals, Eicher Motors and Infosys. If you have questions about this portfolio, feel free to get in touch with us. It'll be our pleasure to hear from you. We have a question from Ajit, who has 150 shares of Mahindra Holidays at 260 and 100 shares of Reliance Capital at 448. He wants to know if you should hold on to both of these stocks. Gaurang?
I would definitely recommend, and ICICI Bank happens to be one of them, because the quarter before this one, the number was highly disappointing and we saw the stock correct quite sharply. Even post the recent numbers, we saw ICICI Bank correct closer to about 300 mark, went even sub 300 and then recovered. And for the last 2 days, it has been recovering very, very smartly. Now, we did see some signs of, bottoming out process in the numbers that the bank just delivered. And that gives us the confidence that going forward, keeping in mind the lower interest rate scenario and the trajectory moving down, and of course, the concentrated effort by the management to recover bad loans, we believe that this is the beginning of a turnaround for ICICI Bank, and hence my advice would be to shift to ICICI Bank with a target primarily about 385, and depending upon how good the performance is quarter on quarter, we could revise it upwards. From Reliance Capital, I believe an NBFC play would be much better in form of Bajaj Finance. Here, I mean, if you go to see the performance, has been consistent over a period of time, and the outlook look much more robust. Keeping in mind the new insurance policy that the government has put in place, my understanding is that this particular NBFC Bajaj Finance could be one of the greatest beneficiaries. So I'm working with a target of about 4,250 on Bajaj Finance, and on ICICI Bank we are looking at a target about 385.
There's another question that's coming from you from Satish Kumar. Now, Satish Kumar holds 1,500 shares of Unitech, which he bought at 30 rupees. He wants to know if he should continue to hold on to that stock. Now, here's the thing, Gaurang. Unitech ended the week at 15. I also do a show called The Property Guide on this channel, where we just talked about the fact that it's been a terrible market for real estate and worse off for the NCR region. Any builder who focuses on the NCR region right now is under tremendous financial pressure when it comes to sales, because the sales, the market has come down by almost 2/3. So would you recommend a real estate stock at a time like this? And of all the stocks, Unitech?
Well, I think you should definitely ask your questions on the property guide that you do the show fair to the management of Unitech as to what came onto them to enter into telecom 2G. We all know what has happened to the counter post the acquisition and the scam that had broken out. I think the confidence has got shaken up to a great extent. Unfortunately, this gentleman has bought it at 30, and like you mentioned, the stock ended the week at about 15 rupees. So you've taken a 50% knock on your investment already. Any pullback or at current levels, I think you should definitely use to lighten up this particular stock. Enter into Ashok Leyland. The stock has corrected to maybe 65, 66 odd levels. This is a pure commercial vehicle play, and we've seen already ground level triggers in terms of uptick for the commercial vehicle in all the three segments: light commercial vehicle, medium-sized commercial vehicle, and heavy commercial vehicle. And this one particular company which has concentrated its effort to bring down the debt on the balance sheet. We are working with a target of about 75, but here again, let me give a disclosure that we might revise this target upwards in case if the debt comes down considerably and the performance improves gradually quarter on quarter.
All right, let's quickly take another question. Ravindra has written in, he holds 1,000 shares of Gujarat Gas, which he bought at an average of 833 rupees. Should he hold on to that stock? He's losing a little bit of money on that stock, but does it make sense to hold on?
It does, definitely. I think the recent correction that you're seeing is only on the virtue of the run-up that the stock had given up. I think, if I'm not mistaken, correct me if I'm wrong, Fair, the stock was almost about 5, 10, 15% over the last almost about 2 or 3 weeks. And then you've seen some profit booking coming in. His investment is at a higher level, but I would not rule out a target of about 865. And not to forget, I think in Thane they have got some distribution, approval for pipe gas, if I'm not mistaken.
All right, very quickly, another question before we go into break. Fazan has written in, he wants to buy Voltas at the current levels. He wants to know if it makes sense. Voltas ended the week at about 281. Well, given the harsh weather that we're having right now in the city of Mumbai and the fact that you said consumer counters are interesting, is Voltas on that list?
Sure. It definitely is, and not only in India. I think in the Middle East where they have their operations, there have been visible signs of improvement over there as well, and the management commentary was quite robust in terms of their outlook on the domestic as well as overseas market, and they've got a decent amount of market share with variable product profile. I think it's definitely a good time to get into Voltas with the recent correction. 335, 355 would be the target to look out for Voltas from a 1 year plus time horizon.
All right, it's time for us to take a very quick break, but stay with us. When we come back, we'll look at the portfolio of one of our lucky viewers, stocks like Coal India and Dish TV that we're going to talk about on the other side. Welcome back. You're watching All About Stocks in ET now. Gaurang Shah is still with us, helping us figure out the strategy for our long-term portfolios. Gaurang, it's time for us to take a look at the portfolio of one of our viewers. Ranjit has written in. He's our lucky viewer this week. He sent us a list of the stocks that he's holding. He wants to know, holistic, if you look at the whole lot, which of these he should be holding on to. Right on top, 250 shares of Dish TV, which he bought at about 74 rupees. Hold on to Dish TV?
Largest player in the direct-to-home segment, we have a positive coverage and our target is 90 rupees, so hold on to it.
Well, he also has 10 shares of BPCL, which he bought at 652 rupees. That stock ended higher, about 764 now. Given your view on oil and marketing, would you recommend he holds on?
Definitely hold on to it. It is the top pick amongst the oil marketing companies for us. We are working with a target of 840, and this is just the beginning of good times for oil marketing companies, so hold on to BPCL.
40 shares of Coal India, Gaurang, which he bought at an average of 366 rupees. Hold on to Coal India at this point?
Yeah, but only thing you need to be patient with this. This stock is associated with mining activity. 435 is the target. One of the largest reserves in the world is with Coal India in terms of coal reserves. So hold on to it.
Also has 5 shares of Maruti, which he bought at 36.47. You talked about autos in the beginning, so very quick view about Maruti as well. From all of the auto stocks at this point, would you recommend Maruti to those of our viewers who are not holding it as well?
It is the top pick in the four-wheeler pack PV segment, and we have recently revised our targets to 4,300, so hold on to it.
Well, last stock on his list, he has 25 shares of Talwarkar, which he bought at 334 rupees. Hold on to that stock?
Well, I'm not too sure about the business model, and there is huge competition. In case if the gentleman can sell this particular stock, my preference would be towards ICICI Bank. Like I mentioned, we are working with a target about 345 to 385 on ICICI Bank.
All right, Gaurang, I'm required to ask you for your disclosure about the stocks we just talked about.
Well, it's fantastic to be on your show as always. No personal holdings in the stocks that we have discussed and I have recommended, but the recos have definitely gone to our clients.
All right, Gaurang, I mean, the feeling is absolutely beautiful. It's always a pleasure to have you on the show, and I know our viewers find it tremendously helpful to hear your advice as well. We look forward to having you back again very, very soon. If you have questions for Gaurang, you know you can write to us. Our email ID is at the bottom of your screen. A copy of the show will also be available on our Facebook page. Thank you so much for watching.